Hello, everyone. I'm Bob Goulder, a contributing editor with Tax Notes. Welcome to the March edition of In the Pages, where we take a closer look at some of the content from our print and online publications. Our featured article for this month was written by the prominent tax historian, Joe Thorndike, who also happens to be a contributing editor with Tax Notes. Joe's topic is just a little bit controversial. It's this idea of whether Americans are paying enough income tax. The piece is titled, "Do Taxpayers Make Better Citizens?" A rhetorical question that we shall strive to answer right here. Now, note the nuance here. We're not asking whether people are paying their fair share, which is a whole different kettle of fish. We're talking about why are so many people not paying any income tax at all? And this is apropos of the filing season that we're right now in the middle of it. Think about the scenario where the common man or woman sits down at their kitchen table as the April 15th filing deadline approaches, and they're armed with their trusty calculator and their notepad, and they dutifully fill out their tax returns. And lo and behold, they get to the last line of their Form 1040, and their tax liability is $0. Okay, it's not talking about the refund, but the actual tax liability. And how do they do that? It's because of all these permissible deductions and credits that they're allowed to take. This gets us into that old argument you've heard before about whether people have sufficient skin in the game by virtue of their taxpayer status. Now, there's a lot to unpack there, and thank goodness we have Joe Thorndike to help us do that. Joe, welcome to the show.
Hey, thanks for having me.
All right. Now, I loved your article. But I got to start out with a critical observation, maybe not critical towards you, but towards the topic generally. It's the year 2022, and we're still talking about whether people have skin in the game, depending on their taxpayer status. Why do I feel like I've seen this movie before?
You know, how many times, Bob, right? Like how many times? It's been so many times. Let's just take it back 20 years, right? Like in the early 2000s, the Wall Street Journal ran this series of editorials about the lucky duckies, right? Where they were talking about people who weren't paying income taxes. And it was like a series of 3 editorials. These were in the early Bush years. And they got a lot of press. And the Wall Street Journal is influential. It made really a splash especially among conservatives. And after that, I think you saw an uptick in conservative and Republican interest in talking about people who weren't paying income taxes. And you started to see candidates take that on as an issue and some interest in the Bush administration in dealing with it. And I remember, I think Rick Perry made it an issue in one of his campaigns. And then, famously, Mitt Romney made it an issue in his campaign. And he had that undercover video made of him where he talked about the 47% who weren't paying, and it proved to be a disaster for him. So I think we have certainly been down this road before. Every year, pretty much, we see news stories about who's paying, who's not paying, and I don't think we're going to see an end to that. This is a popular story. It resonates with a lot of people. So yeah, we've been here before, and I think we'll be here again.
Now, the instigator, if you will, for this current manifestation of the issue is a senator from the state of Florida, Rick Scott, former governor who ran for Senate and won. He has this 11-point plan to rescue America. And we won't worry too much about rescuing America today, but one of his 11 points has a little bullet item about making sure everybody pays a little bit of income tax. Even if it's not a whole lot, everybody's got to pay a little. And he doesn't say how he's going to do that. Before we get into the policy, though, I want to look at the numbers. Your article goes over these numbers. And I don't want there to be hyperbole or rhetorical comments. Is it this percent or is that percent? What do the numbers tell us?
All right. So, I mean, on some level, Scott's not wrong. He's not wrong in the numbers. So recently, but here's the issue. The numbers jump around a lot, and they don't necessarily mean what people think they mean. So are half the people in the country not paying income taxes? Well, roughly speaking, extremely roughly speaking, that's not a crazy number. Actually, during the pandemic, it's been well more than half because a lot of the economy tanked. A lot of people lost their jobs, so incomes declined. That meant that a lot of people were below the income threshold for having to pay taxes. Also, Congress enacted a lot of relief payments as part of their pandemic relief packages. These were packaged as refundable tax credits, and that wiped out tax liabilities for a lot of people. So the number of people not actually having to pay income taxes jumped to more than 60% in 2020. I mean, that's a big number, right? But that's kind of a blip because of the pandemic. And according to the Tax Policy Center, who's run the numbers on this, and they do regularly, they're sort of the famous people for running this number. It's headed down. That number should be under 60% for the 2021 tax year. And by 2026, I think it's going to be down under 40%. So, you might still think that 40% is a number that's too big, and fair enough, right? We can talk about that, and we will talk about that. But we should, before we get like too worked up about 60% or 50% or 40% or anything else, we should also consider that almost all those people in that group, however big it is, do pay some kind of federal tax. That's the other part here that's misleading, not just the number itself. But these people are paying other taxes, like payroll taxes in particular. For lots of people, they pay more in payroll taxes than they pay in income taxes. They also pay federal excise taxes, like gasoline. There's a tax that people might be thinking a lot about right now. They'll pay taxes on alcohol and tobacco and other excise taxes. And that's not to mention the state and the local taxes that these people are paying as well. So it's not right to imply that these people are freeloaders simply because they don't pay one kind of federal tax. These people already have skin in the game. It's just not income tax skin in the game. And last, these people also, if they don't pay in a given year, if somebody doesn't pay income tax in one year, that doesn't mean that they didn't pay the previous year or that they won't pay the next year. People move in and out of non-payer status. So if you don't have skin in the game right now, you might have had it yesterday and you might have it tomorrow. So again, these numbers are a little bit not quite what they seem. It doesn't mean that half the country is just skating by, without any tax liability ever. It's just not that simple.
Okay. Thank you for getting that settled then. And again, a related point now, this isn't happening by accident. I don't want anyone out there to think that this is a tax gap issue. We're not talking about people who are gaming the system or committing some kind of error or omission when they're doing their tax returns. These are tax breaks that Congress has purposefully given them, right?
Yes, that's very much true. We're not talking, when we're talking about non-payers, we're not talking about cheaters. We're not talking about evaders. We're talking about people who have no net tax liability because elected officials decided that they shouldn't have any net tax liability, that they shouldn't be paying income taxes, right? So sometimes it's because they simply don't earn enough. That's like when those people lost their jobs during the pandemic, or because in any year they don't make enough to pay income taxes. They fall below the threshold. And sometimes it's because they receive refundable credits that cancel out whatever taxable income they might have. Credits like the earned income tax credit, for instance, or the child tax credit, or the child and dependent care credit. Recently, those pandemic relief credits, which went to basically everybody, really wiped out liability for lots of families, and families with children, especially. And these were designed as tax credits. They could have been designed a different way. They might have just mailed checks and not framed them as tax credits, but they were framed that way. So that is where a lot of this comes from, and those are deliberate decisions on the part of policymakers. That's not some sort of accident. Lawmakers create these credits because they think that they're a good idea. And if you don't like the effect that those credits have on the tax paying of people, then maybe that, and the fact that they're turning them into like non-payers, then maybe you should complain to your lawmaker about the credits and not about the people who are taking advantage of the credits. Because I mean, I'm guessing that when you have a credit available to you and you're filing your taxes, you probably claim it. I know I claim it. And I'm wondering how many people out there who are out, feeling a little outraged about the half of people who aren't paying taxes, how many of them sent back their pandemic credits, their pandemic checks that got automatically deposited in their bank account? I'm guessing not many people did that. So I think it's unreasonable to complain that half the people aren't paying when most of us went ahead and accepted those credits anyway. So that's basically my point. And that's honestly my point about most tax provisions that people get outraged about. we should spend less time complaining about the taxpayers who are taking advantage of them and more time complaining about the policymakers, about the lawmakers who are putting those things in the tax law in the first place. If there's any culpability here, really, it belongs to the lawmakers. And I'm not really suggesting that there's any culpability in the first place, because a lot of these credits, I think, are good policy.
Yeah, exactly. If somebody came along and challenged my patriotism or said that I don't have enough skin in the game because I'm taking a mortgage interest deduction, I'd be like, it's there, it's in the code. Don't blame me for taking that deduction. Okay,
Right.
enough said. Now, really, when we dig down into the policies here, Joe, it's a question of, do we want the income tax to be a mass tax that applies to everyone, or a class tax, almost like a de facto wealth tax that only applies to those at the upper end of the income strata? And as a historian, you understand the lineage of the income tax probably better than anyone. Tell us, over the course of the past 100+ years, what is the standing of the income tax? What should it be? What was it intended to be? Is it a flexible concept? Is it change over time? Tell us about this.
It's definitely changed over time. I think it still has some of its original and qualities associated with it. So it starts out its life as a rich person's problem, and very much designed to be a rich person's problem. We're going to set aside the Civil War income tax for now, because it's just too moldy and oldie for us to really worry about. But let's look at the 20th century tax that shows up in 1913. Very narrow, very light. The top rate's only 7% on the very richest people. It's designed to balance out the broad-based taxes on consumption that regular non-rich people are paying. And that's what's funding the federal government for the most part. And they want some sort of tax that is more painful for the really rich people to kind of balance the scales of justice. There are just single-digit people paying this tax right now at that point, right? So we're saying now only half the people are paying. Well, back then it's like 5%, 4%. It's very small numbers. The tax grows really quickly. It grows quite quickly. Like right after it's enacted. It's enacted, 1913. World War I comes along right away, and they start to expand the tax and they raise the rates. The top rate goes from 7% to 77% in just 4 years. And at the same time, the number of people paying grows, and it probably reaches something like 15% by the end of World War I. That's still a pretty narrow tax, right? I mean, that's a lot less than half that we're complaining about right now, right? So it's still a rich person's problem, still designed to balance the scales of justice, right? And that's pretty much the way the tax is seen in its origin, and it's got a broad support based on that, but there's not everyone is super happy. So like that, that the Republicans in particular at the time, who don't look a lot like the Republicans of today, but share some things. They're not so happy with this, right? They look at this and they say like, hey, this is class legislation and we don't really like it. We think more people should be paying this tax. One person in particular, Andrew Mellon, Treasury Secretary Andrew Mellon. He's one of my favorite guys to talk about. I don't know if he would have been one of my favorite guys, but he's one of my favorite guys to talk about. He's the Treasury Secretary all the way through the 20s. They say 3 presidents served under Andrew Mellon, but they really couldn't get rid of him till the very end. But in 1926, he complains about an effort to make the income tax even narrower. Like the Democrats want to return it to like something closer to the 1913 version. And Mellon says, here's a quote: "As a matter of policy, it is advisable to have every citizen with a stake in his country. Nothing brings home to a man the feeling that he personally has an interest in seeing the government revenues are not squandered, but intelligently expended." Now, I mean, that's the skin in the game argument, right? I mean, almost 100 years ago. And so I think that I think you see here that some of these arguments that we have now really are exactly the same arguments we were having a long, long time ago. We're still fighting over what this tax is supposed to be doing. And just like now, if you'll forgive me, I'm going to give you another long quote. So, pardon the historian's like habit here, but just like now, people fought back against that, right? So, in the beginning, just a little while ago, I was like, hey, you say half the people don't pay, but these people are paying all these other taxes, right? Well, Mellon comes out in 26 and says, hey, we need to have enough people paying because lots of people aren't paying right now. They're not paying the income tax. And here's what one newspaper responds. The Omaha World Herald says, We pay taxes on our coats, on our shoes and socks, on our hats, on our shorts and underwear, on the food on the breakfast table, on the materials which our homes are constructed, on the furniture in them, on the vehicles we ride in, and blah, 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 right? Same point. Like, we're paying all these other taxes. Those are all excise taxes, which they're all paying at the time. Don't these payments entitle us to feel equally with Mr. Mellon that we have a stake in our country? So it's the same argument back again that we're making right now, which is, hey, this skin in the game argument, that's not fair. We have skin in the game already. And so I think that, this is why I think that the history really is relevant, because if we think we can escape it, we're wrong. What's striking also, and I won't bore you with more long, tedious quotes, but I'll just say that it wasn't strictly a partisan argument. There were Democrats on this side of the argument too. Cordell Hull, who is considered the father of the income tax and is a Democrat, he too thought it should be broader because he just thought it was healthier for democracy. And there was a legitimate debate going on about how broad it actually should be. And it continued all the way through the 1920s. I will give you just one more quote because I cannot resist. It comes from Edwin Seligman, who is one of the original economists to champion the income tax. And he says at the time during this debate, it will not do to have all the rights on one side and all the obligations on the other. If you're developing a community where only one class pays the taxes and the other class, because of its immense numbers, votes the expenditures, you are opening the door for all sorts of political abuses. Now, some people think that Seligman was a conservative and other people think he was a progressive. And I think he was kind of both. And I think that quote probably puts it more on the conservative side in that moment. But I think it really encapsulates a legitimate argument that I'm not prepared to come down really super strongly on either side of it, because I think both sides have a legitimate point. There really is an issue of citizenship here. And I think it's wrong to scapegoat non-payers of the income tax as somehow less upstanding and as lesser citizens, but it's also reasonable to ask, like, is it healthy for our democracy and for our tax system particularly to have these people not participating in this element of our democracy? I think that's reasonable to ask.
I think it's very reasonable to ask, and how people answer it will maybe vary a bit. But let's fast forward to today. So we've got Senator Rick Scott from the state of Florida with his 11-point Rescue America package, and he says yes, everyone should pay a little bit of tax. I'm curious about what he would actually want to do to get there, because if you have a pool of people that are non-payers and you want to transform them into taxpayers, correct me if I'm wrong, that implies a tax hike. And not a small one, because we're talking about many, many millions of households, frankly. Is he proposing a tax hike? And the last time I checked, part of the Republican agenda was we don't want to raise people's taxes. And here you have a conservative Republican senator. If you connect the dots, there's an implied tax hike there. What do you make of that?
Yeah, I think it's not so implied. I mean, he's pretty much stated it outright. I think at one point he said it's not for the faint of heart, my proposal, right? But so let's start by saying it's not actually a proposal, right? This is a talking point, right? And so anything that we say about it involves us making all sorts of assumptions about what he might actually mean, because all he's really said, again, just a talking point, is half of the people aren't paying and they should pay something. I mean, we could look at that and interpret that in all sorts of ways, and some of them are a lot more alarming than others. It might imply the elimination of all refundable credits, for instance. It might say like, well, because a refundable credit, for those of you playing along at home, a refundable credit means that if the credit exceeds the amount that you owe in taxes, they're going to cut you a check for whatever that excess amount is, right? And so if we interpret it that way, that means that they will not cut you a check for the excess amount. The credit might wipe out any taxes that you owe, but if you don't owe any taxes, you're not getting any money. That would be a big change, and that would cost a lot of people especially poorer people, a lot of money. That is the way the Tax Policy Center interpreted the proposal, such as it is, the talking point, when they did their estimate on how, and we can talk about that later, about how much it would cost, how much it would raise, what it would cost people. But that's just a guess, really. I think there are other ways to interpret his idea that are somewhat less alarming. They might be more symbolic than substantive, and I'll give you some thoughts on that as we go along too, because some of those I could get on board for. I have a hard time getting on board for the idea of wiping out all refundable credits. But at this point, I think it's fair to say, to be honest, that Scott hasn't really thought through this idea, or if he has thought it through, he hasn't shared that with the rest of us. He's really just put out a thought, an idea, an impulse, an impression, a gut feeling, hoping that it will resonate with people, which is a big roll of the dice on his part. And I'm not sure one that he's going to find is shared by a lot of people. But I don't think it's worth trying to read the tea leaves and figure out what he's really thinking, because I don't know that he really has thought it through.
Okay, well, let me ask you this, Joe. What other prominent Republicans, or even less prominent Republicans, have jumped on the bandwagon and said, you know what, I agree with him? What about Mitch McConnell,
Okay,
Senate Minority Leader? I mean, there's other people out there. Are they telling him to hush, hush, don't talk about this? It didn't work out so well for Mitt Romney 10 years ago. Or are other people saying, yes, double down on this?
it's hard to know exactly what they're telling him in private, but what was evident for all to see is that Mitch McConnell basically turned his back on him in public when it came time to discuss this. And as soon as Scott walked away from the microphone, essentially said, yeah, we're not going to be doing any of that. So, I think that Scott has obviously got ambitions for higher office. And I think people like Mitch McConnell have ambitions for a Senate majority. Those ambitions don't always line up with one another. And those people don't necessarily read the political winds the same way. So no, I don't think a lot of Republicans are jumping on this bandwagon.
Okay, well said. Now, Joe, you've used the term a couple times, fiscal citizenship. It comes across very well in your article, but I'm wondering, see, I kind of have a concept of fiscal citizenship that substitutes the duty of paying income tax for the tedious task of preparing your return. If you were to try to tap into the soul of the American populace and say, what is the act related to the tax code that binds us all together as one people? We're sort of all in this together, the sort of skin in the game thing. It isn't that we all pay taxes, as you've noted, 61% aren't for 2020 tax year, but we're all filing returns. Is that legitimate to just substitute a compliance obligation for a payment obligation and say, there's your skin in the game?
I think that's definitely possible. So I'm not saying no. How about that? I think that's a big part of it for me. So I mean, one person's fiscal citizenship might not look like someone else's, but let's say for me, I think that is definitely a big part of it. It may not be quite all of it, but it's definitely a big part of it. But so let's jump into this though, because I love this concept of fiscal citizenship. It's really important to me. It's kind of the reason why I work at Tax Analysts. It is what's kept me here all these years. So, and it takes us back to this question about the historical nature of the income tax as a mass tax or a class tax. A lot of that old argument, as those quotes suggested, concerns fiscal citizenship. So what is it? What is this concept? So by my definition, fiscal citizenship is that web of rights and responsibilities that bind the citizen to the state and the state to the citizen. The income tax is one of the principal instruments of that relationship, and it has been for more than a century, since it was really brought back in 1913. I think that fiscal citizenship is both substantive, paying, and performative, filling out your returns and filing them. So I think that performative thing is I think cultural historians would look at that and call it sort of a ritual. Especially, it used to be even more of a ritual. It's sort of a quasi-public ritual. It's shared in certain public ways. Especially, it used to be in the annual tradition of tax filing. Right, there used to be that like rush to the post office on April 15th, and they used to have bands playing at the post office. They'd keep it open until midnight and everyone would go down there. There was like a party atmosphere. Well, the post office is barely open on Saturdays nowadays, so we don't do that anymore. And electronic filing took all the fun out of tax filing, right? Or actually made it possible for those of us to do it at the last second. I don't file my own, like most people. I don't file my own. I don't do my own returns anymore. I just sign my own returns now. But anyway, it's a tradition that we carry out in private, in preparing our returns in private, but that we discuss in public and we talk about in public a lot. Starting later this month, the media is going to be filled with stories about tax filing. And around April 15th, there's going to be a huge burst of those stories, even though, most of us pay our taxes piecemeal all through the year, right? Like it's taken out of our paycheck every month. And this like April 15th thing is just a reckoning, but like in a lot of ways that the actual tax paying has really all been done either through withholding or through estimated taxes, if that's the way we go. So I think that it's still, even though so much has changed because of technology, April 15th is still a sort of national anti-holiday that we all share, and we all sort of non-celebrate together, mourn together, or something like that. And I think that that's still important, right? I think that moment matters. That is a moment in which we recognize fiscal citizenship, when we all take stock of our obligations. But it's also a moment when we take stock of the state's obligations to us, right? Because at that moment, we're all a little bit irritated, right? We're all a little bit unhappy. And we sit there and we think, what am I getting for this? Am I really getting my money's worth? Because I really do believe that tax paying is an exchange of money for services at some level. That is the social contract, right? And that people look at that moment and think, what am I buying? Am I buying, as Justice Holmes said, am I buying civilization with this? Is the civilization I'm getting back for this worth it to me? And I think that moment is a good one, right? In both senses. Like, here's what I owe the state. Is the state giving me back what it owes me? I think in both ways, that is a healthy moment. I think both parties might find that something to like about that, right? Democrats would, if you're a big state Democrat, you like the idea that people feel an obligation to the community and they're writing the check to support the community. If you're a small state Republican, you might like the idea that it's that moment when everyone turns a critical idea on big government and thinks, is that really good? This is healthy, right? I hate to be like, I don't know, an idealist about this sort of thing, but I think this is a moment where tax actually does something good for the world when it makes everybody think seriously about government. So yes, I like tax filing. It's irritating and nobody enjoys it, but that's actually kind of the point. So I think that's good. That's why I like your idea. Tax filing is important. Is that enough? Well, I think yes. It might be enough, but it doesn't have to necessarily be all of it. Here's the thing. We could interpret Scott's proposal somewhat differently. We could say, yes, well, because people who are getting refundable credits, they have to file anyway, right? That's how you get your refundable credit. But we could also say, you also have to make a little payment. You choose a number, $25, $50, $100. I think in the Tax Policy Center's estimate, they wanted a net liability of $100. But I'm not calling, this is not a net liability I'm talking about. Let's call it a filing fee. When you file your taxes, you have to send a $25 payment in with those taxes, exclusive of anything you may or may not owe for your taxes. And that applies whether or not you're getting any money back from the government in the form of a refund. I have recognized that if you're getting a EITC payment, it might net out. It's going to be nothing. But I think that the act of writing the check matters. It's symbolic. I think that now this idea is not new to, it's not original to me. They actually cooked up this idea when Franklin Roosevelt was governor of New York. They seriously considered this idea to try. There was, except then the filing fee was going to be $2. And the idea was just so that people would participate materially in that process. And it's a lot of extra work. The IRS has to cash the extra check just so that they can write another check later on. Yeah, but you know what? I think it's worth it to send the message. And I want to give a shout out to someone else who's made this same kind of suggestion. I don't know that he suggested a filing fee, but he's made the same suggestion that we should try to set aside the refundable credits over here from the taxes due over here. And that is Larry Zelenak, who is a law professor at Duke University. And he has said the same thing, which is that if we maybe should define a lot of these programs like the EITC or other refundable credits and define them out of the income tax. They could still be administered by the IRS, and they could still look and feel and act in almost every way like they currently do, but we would not describe them as offsets to your tax bill, and simply just move them out of the system. And that way we would preserve people's tax paying, the symbolic element of their tax paying, but still run these important programs through the agency. And he's got a quote here that I think he says, the idea would not be to pull the wool over the public's eyes. Rather, the idea would be that symbolism matters for its own sake, independent of substance, and that changing the labels would change the symbolism. I really think Larry is right. I know it's like, Larry recognizes that's a lot of extra work for the IRS. I do too, but I mean, that's what we pay them for. We probably don't pay them enough, but that is what we pay them for. And I think it's worth it. I think it would be worth the extra work. That's a long answer to your question.
But that's a great answer. And it sets up my next question, because I want to challenge everything you've just said, your concept of fiscal citizenship, and challenge it in this manner. If you have a consumption tax and you're paying a boatload in consumption taxes, like a VAT, other countries, like 170 countries out there, have a totally different image of fiscal citizenship because they know they're paying a boatload of tax in the VAT. Now, it's not very visible, right? It's not, it doesn't have this filing ritual where on April 15th you fill it out. You're paying VAT every single time you purchase and consume a good or a service, and it adds up to a huge amount of money. Why can't that satisfy our notion of fiscal citizenship? Because it is devoid of the symbolism, but it has the economic contribution.
Yeah, I think if you presented that idea to Senator Scott, what do you think he'd say?
He's going to not like a VAT.
Yeah, I mean, I think he'd say that VAT is French for big government, right?
Yeah, exactly. That's exactly what he would say.
And then the next thing he would say is just what you just said, which is that it's not visible enough. That's always been a really sort of curious complaint to me about the VAT, because whenever I travel in a country that has a VAT, I always think it's pretty darn visible.
It's on the receipt.
It shows up on the receipt. So I never fail to notice the VAT. And I guess it could say like, here's the VAT and this is to pay for everything important or something. I mean, whatever. I don't buy the non-visibility argument about the VAT. But I think that the reason it would be problematic here is probably one of legacy, is just that we've defined the income tax for so long as an element of citizenship that that having people not participate in it is a problem of itself, right? That it would be hard to clear that hurdle just by creating a VAT. And the VAT is often dedicated to certain programs in a lot of countries where it's used towards certain social programs. And honestly, that is the answer that a lot of people give regarding non-payers for the income tax. When I say, oh, but they pay payroll taxes, they were like, yeah, but payroll taxes pay for Social Security, which they get back. So that doesn't count. That's a different kind of tax. We don't need to go into that. I don't think that argument holds water ultimately, but it does muddy the waters, let's just say. And I think that would probably be an issue with the VAT, is that because if it ever appeared in this country, it would likely be directed in a certain way, or might be directed in a certain way to certain programs that might muddy the waters. So I don't think you're wrong. that it could be defined in those terms. It could be framed in that way as an element of fiscal citizenship, but and I think in European countries it does function that way because it supports social programs which are are designed to in a socially conscious way to support one another. But I think in the US, with its long history of relying on the income tax, it would be pretty hard to change the symbolism like that.
Okay, there you have it. Now we talk about VAT. It's sort of a relatively recent tax. You didn't see too many VATs before the 50s or 60s. And I wanted to ask you about FDR. I've got written down in here in my notes, what would FDR do? Well, I think we know because it crossed his desk, right? Correct me if I'm wrong, but there's an old legend that we've all heard that FDR's advisors wanted to pitch him on a broad-based federal consumption tax. We won't call it a VAT because VATs weren't around in the 1930s, but that FDR stewed over this and thought about it and came to the conclusion, said, no, if everyone's going to have skin in the game, it shouldn't be a consumption tax base. It needs to be the income tax base, which picks up on the whole VAT themes. But you're the FDR guy. Tell us, what would FDR do here?
Uh, well, what's great about FDR is that he was from New York, not New England, but he reminds me of that old saying about New England, right? If you don't like the weather, just wait a while, it'll change, right? Well, there's some truth to that about FDR. If you don't like what he had to say about something, just wait a while and it'll change. So if you don't like what FDR said about something, if you look back far enough or look forward far enough in his writings, you're likely to find him saying something that's really just the opposite. That's not entirely true, but on the subject of taxation, it is in fact sometimes true. So, for instance, I talked about how Democrats were the party of narrow income taxes targeting the rich, right? FDR was totally that kind of Democrat, right? He liked his income taxes to be heavy, narrowly targeted, focused on rich people. And he focused, the early New Deal or the middle New Deal was really all about that. But by the late 1930s, when World War II was beginning to sort of like show up on the horizon for the United States in say 1939, the war is being fought and FDR is already thinking like, we might end up in that war. He's starting to think about, well, how are we going to pay for that kind of thing? How are we going to, and also prevent inflation if we end up in that war? He starts to contemplate other kinds of taxes that might be necessary. The two obvious ones on the table are some kind of broad-based sales tax. Back in that day, they were really talking about a retail sales tax or a manufacturer's sales tax levied at the manufacturer level. That on one hand, or a broader income tax. And what Roosevelt did is he had to choose between these two options, really, and he chose the income tax. But he couldn't just raise taxes on the rich because they were already paying really high rates, 70%, something like that in the late 30s. And he couldn't raise it high enough to raise enough money. So he had to contemplate a broader tax. And he started talking about why it might not be a bad idea to broaden the income tax. And so in 1939, he says, reporters ask him about this because it's sort of like in the air. And he says, I think we've got to broaden the base a little bit. It won't bring in much revenue, but it does give added responsibility of citizenship. I mean, citizenship. That's Andrew Mellon, right? That's the same argument all over again. Like, who is this guy? This is Franklin Roosevelt. He sounds like Andrew Mellon. It's crazy. And then 2 years later, we're on the verge of getting into the war. And he says that I'm convinced that the overwhelming majority of our citizens want to contribute something directly to our defense, and that most of them would rather do it with their eyes open than do it through a general sales tax or through multiplication of what we have known as nuisance taxes. So this is basically him saying, like, visibility. The income tax is more visible than any kind of sales tax would be. He goes, quote, in other words, most Americans in the lowest income brackets are willing and proud to chip in directly, even if their individual contributions are very small in terms of dollars. He's trying to make the case that these people have skin in the game. They want to have skin in the game. They want to do it visibly. This is a familiar argument for Republicans to be making, but FDR is making it by the 1940s because the conditions have changed. The environment has changed. This is an era when Americans are already talking about shared sacrifice because We're not in the war yet, but it's starting to look like we might be. And then certainly as soon as the attack on Pearl Harbor happens, this sort of argument really ramps up dramatically. So, Roosevelt hated the sales tax, had always hated the sales tax. And he had to choose when it came up to this moment, are you going to go to that hated thing that you've been railing against for all these years? Or are you going to compromise a little bit on, or a lot of it on what kind of tax the income tax should be? It was really a pretty easy choice for him. He regarded the income tax as altogether fair. And I mean, he hated the sales tax so much that he got the Treasury Department to write him a memo called The Evils of the Sales Tax. I mean, he really loathed it. He just thought it was unfair in every possible way. So again, easy choice, even though it required some sort of ideological flexibility for him because the world was changing. So yeah, he would not have been probably a huge fan of your value added tax. Luckily, he didn't. For him, he didn't have to make that choice.
All right, Joe, I'm going to leave you with one final question here, and it's a bit conceptual. Fundamentally, are we asking too much of the income tax? You've got people like FDR, and I suppose you want to throw in there Andrew Mellon and Mitt Romney, and now Senator Rick Scott, who want it to be a mass tax. And then you have people who look at the world today and they look at income inequality and they think, well, gee, what if we took the income tax and turned it into almost like a quasi wealth tax? Okay, so that's a class tax as opposed to a mass tax. If I were to suggest to you that it can be one or the other, but it really can't succeed at being both, and in some ways it seems like we're asking it to be both, what would you say to that?
False dichotomy would be the first thing I would say. I think to some extent it can be both. It depends really though on what you're really trying to accomplish. So if you really, can it be a wealth tax? No, it really can't be a wealth tax. It's never going to be the instrument for remaking the world, right? And the structures of economic inequality. I really don't think that it's ever going to do that. If you want to do something like that, you're going to need a different kind of taxing instrument. And even then it's going to be hard to do it all on the tax side. And I think that is actually one of the lessons of history, is that many of the big changes in restructuring the way that the world works and the way an economy works happen on the spending side of the equation. So I think a lot of people have unrealistic expectations about what tax might actually do for them. A lot of progressives have unrealistic expectations. But that being said, it doesn't mean that the income tax can't do both, in the sense that it can be used to tax people across the full income spectrum. Right? You can have an income tax that is broad, that taxes people from the low end to the high end, because that's what a progressive rate structure is for. That you can have very light rates at the low end to zero, in fact, at the low end, and very high rates at the high end. And that is, that there are 150 years of research and theorizing on tax fairness that suggests that that is entirely possible, and in fact is entirely fair. Now, people will argue and have argued for that 150 years about whether that's true or not, but I think it's perfectly reasonable to think that the income tax is flexible enough to do that. That, in fact, was why people liked it so much, was because it had that flexibility. It could be used to tax everyone. And in fact, that's exactly why they went for it in World War I and World War II, in the Great Depression, because they thought it was the answer. It was the best tax because it was so flexible, could do everything.
There you have it. Everything you wanted to know about having skin in the game. The author is historian Joe Thorndike. The article is titled, "Do Taxpayers Make Better Citizens?" Rick Scott thinks so. You can find it in Tax Notes. Joe, thank you for being on the show, and good luck doing your taxes this year.
Yeah, well, tell that to my accountant.
There you go. Thanks for watching. See you next time. Want more like this? Subscribe for more tax videos. Special thanks to our executive producers, Jasper Smith and Paige Jones, and showrunner and video editor, Jordan Parrish.